All right, guys, welcome back to the message stock pick video coming right at you. We purchased over 500 shares within the last couple days. I'm going to disclose those stock picks to you, let you know just a brief idea of what I was thinking. But we picked up 10. Okay, we're going to be disclosing them throughout the course of this video, rapid fire. I'm going to shoot them out there for you as quickly as I can. Just real quick, if you think about it, to support the message throughout the duration of the video, man, you want to hit the subscribe button. Help us support the message we're putting through, man. Let's jump right into it. The first one, I wanted to add to the bond portfolio. So we added BMDX, which is the international bond exposure. We added 100 shares there, and that adds and solidifies a little bit better of a dividend offering there in the ETF portfolio. Now, this is the only stock buy that I made in the joint brokerage account that houses my entire fixed income portfolio. I declare that to you guys openly. But the BMDX is going to fill a nice gap there for the international exposure to the bond portfolio. Super stoked at that. We bought 100 shares of that, so fairly large position there. I'm excited to have that, and that really should round out that portfolio, maybe a little fine tuning here and there, but I think I've got that allocation really dialed in. Second one is kind of a unique pick. Ticker symbol is 𝑠𝐼𝐋. It's for Six Flags Great America. It's an amusement park here, domiciled in the U.S. We picked up 50 shares of that. The cool part about this is they just reported just today, the day that I'm doing this video, after hours, the stock actually went down a few percentage, and it was unjustifiable, okay? They've had increased revenue over the last 9 reporting quarters. Very, very impressive, very solid business. But more importantly was the ability to pick this stock up at a price to earnings ratio less than 16 and still get that monster dividend at 6.32% yield on this one. This has been one that I've looked at for quite a long time. Its sister in the industry, which there was rumors, which I believe have been dispelled today, that they were looking to purchase Cedar Fair, which is my absolute favorite amusement park. But it is a limited partnership, and based on valuation, I thought Six Flags was actually a better deal. So went ahead and purchased 50 shares in that one. That found a nice place in the Roth IRA. You're going to find the theme amongst these names that I'm going to declare to you was strategic, attempt to strengthen my staples and especially my discretionary categories in the portfolio. So Six Flags, we are a proud owner now, 50 shares. The next one on the list is Kroger. I just took this into a swing trade a couple weeks ago. Watched the stock kind of level out at 25. Picked my entry here, less than 25. Picked up 100 shares there, 12 times price to earnings. We're looking good there at a dividend yield of 2.65. So purchased Kroger Foods. It's the second largest grocer in the United States. They own what most of us are familiar with is the grocery stores Kroger and also Fred Meyer on the West Coast. So very, very good, very solid. Excellent, about $20 billion in market cap on Kroger. So was glad to enter into the stock. Get me back into that dividend exposure at 2.65%. The next one is another one that's going to surprise you guys. This is where the value really meets the road for me, looking for value in this. The next one, we picked up 100 shares of Goodyear Tire. Goodyear Tire is denoted with the ticker symbol GT. It offers a dividend yield of 4.22%, and it does so sporting a price to earnings ratio less than 10. That doesn't happen very often. There was a lot of different metrics I looked at in these value plays. These were the most valuable that I found in the market now, and I contend there's always values in the market being created. I don't really care if we're approaching an all-time high in the market. These were ones where I was able to check the value category, and at 8 times price to earnings, I thought that was a phenomenal deal. Add some discretionary back into the portfolio with a name like Goodyear Tire. It was nice. I had a 3% bump the day that I bought it. So nice little start there. Give myself a little bit of buffer on a new position in Goodyear Tire. The next one is one that I've owned before. It's one that I've talked about on the channel, Marathon Oil, ticker symbol MRO. We purchased 25 shares of MRO, sports a small dividend yield of 1.73%. Price to earnings is actually less than 10 on Marathon Oil. Valuation has just become very, very attractive in Marathon. So we went ahead, and this 25 shares actually increases an existing 10-share position inside of the first trade account, okay? So this will actually go into the taxable brokerage with first trade. So that was one of 3 stock buys that I made in there. The second being adding to my position in SPHD, which is Invesco's dividend payer from the S&P 500, top 50 value dividend plays. I only added 5 shares. Remember, this is a rather small portfolio with closing in on $6,000 in that portfolio. But that sports a dividend yield of 4.15. So for you guys that are seeking out an aspect of dividend yield in the portfolio, SPHD does it, and it fits really well into this portfolio for me and what I need out of it. Now, the next 2 that I'm going to disclose to you are not value plays. They are the growth plays, and I've been watching these very, very carefully. Facebook is the number 1 with 30 shares in Facebook, so rather large position there. And the second one is CRM Salesforce. This was a double block. The first block picked up at an entry of 144. The second block of 20 shares, I actually got sub 140. So we're going to hold the shares long on these. These are 2 out of the 3 of my favorite growth stocks, Google being the third. But I split these 2 names. The one, Facebook, went into Roth IRA number 2, and then CRM Salesforce went into Roth IRA number 1. So went ahead and added those rather large positions into those 2 growth to kind of put the icing on the cake in these 2 portfolios. The next one is a name that I have not owned before, and it's one that I have declared over the channel to be an industry that I don't typically get involved with, but Royal Caribbean met the bill. I looked at 2. 2 looked very favorable, the other being Norwegian Cruise Lines, and I would have bought it. It checked all the boxes for me to go ahead and enter into Norwegian Cruise Line. Unfortunately, it does not yet pay a dividend, but probably the better of the 2 as far as growth. However, as far as quality and value, I opted for Royal Caribbean. Sports a dividend at 2.78%, price to earnings ratio around 12. So from a value perspective, I thought it was justified in entering into the starting position 10 shares of Royal Caribbean, ticker symbol RCL. So first time owner of that company, and I'm really glad to finally be broke into and take advantage of what I feel is going to be an industry that's going to be on the upswing and growing quite nicely as the population does in fact continue to grow and demand that level of service, okay? The last one is going to be Conagra Brands, ticker symbol CAG. We picked up 50 shares of Conagra. Sports over a 3% dividend yield, 3.10 to be exact. This was a little bit more spendy, but such a wide moat with the frozen foods business. I know a lot of people are going to hit me up and say, why did you do that? This is a little bit on the back wave of what people prefer nowadays, but from a value perspective, I thought it was a great entry here for Conagra. Unfortunately, the PE was a little bit rich, I felt, but I really wanted to add that particular name into the portfolio to grab some exposure, and quite frankly, it was the best one that I could find. I did comb over a lot of stocks that did not make my buy list. The 520 shares that I just disclosed to you guys are all purchased and put away. The ones that I looked at and did not buy is Daimler Chrysler. I looked at Honda Motors. I looked at Toyota Motors. I looked at Norwegian Cruise Line. I've already told you guys that. And also Cedar Fair, that was another one. I will probably be looking to add Cedar Fair to the portfolio down the line. And then Philip Morris and Altria, probably right there at the top as well in the discretionary and staples respectively. I know they're staples. I'm not sure why, but those are some of the ones that I looked at that did not make the buy list. These are the ones that I declared to you guys. Again, over 500 shares added to the portfolio this week. Guys, I really hope you appreciate tuning into this video. I try to roll these out, let you kind of get on board my magic carpet, man, and ride with me as I'm making these stock purchases, looking to increase and build wealth by placing as much value into the portfolio as I possibly can, and I try to disclose those to you guys and let you know where I'm at with my stock purchases. If you enjoy the message that we're putting through, you want to hit the subscribe button for me, help me support the channel. If there's stock picks that you're looking at, these stock pick videos are a great way to leave your stock picks in the thread, in the community discussion, so folks can look at what folks are doing in the stock market. Definitely want to share the message with anybody out there, friends, family. Bring them onto the channel, man. Anybody's welcome, and I do in fact contend that investing is for everyone. Guys, thank you so much for tuning into the video, and good luck in your investment future.